Gary Quackenbush is sponsored by the Word on Wealth Radio Network.
The airing of this program by this station is not an endorsement or recommendation by the station of the products or services discussed in the program. The station does not guarantee the results of any investments made by a listener to this program.
This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's Gary.
Happy Tuesday. We've got Shanne Sleder. Have you ever wondered if, as you get into retirement age, you're sitting on a bunch of equity and that you're looking around going, I don't have time. I don't have money to travel. I don't have money to remodel. I'm really stressing out financially, and it shouldn't be this way when I am so gray-haired like I am. Well, we've got Shanne Sleder. He's our reverse mortgage advisor and our mortgage advisor here on the Word on Wealth. We've got Shanne here to help us talk about all those things and resolve those situations. Shanne, how are you today, man?
I'm doing well, Gary. How are you doing?
Doing really well. I'm always excited for Tuesdays because I run into so many of the situations that you and I talk about with people with, as people get older and as they don't have any more like actual income, maybe they're living off of pensions or Social Security or their investment accounts. And right now that's kind of a scary thing to live off your investments because sometimes they're not doing that great. But you've been coming up with all kinds of solutions to reduce financial stress, to give the freedom that people want. And that's what we get to talk about today.
I'm excited to share that and, talk a little bit about, just what seniors really want to experience during retirement versus what is actually happening to a lot of them.
Excellent. And I know last time we talked about this you had asked me, you said, so Gary, what do you see in your clients every day when you do this? What are they missing out on? What are their stresses? And we talked about it from my perspective. So today, let's do that from your perspective, because you do this as a professional, you see it every day. What would seniors typically want in retirement? But then what are they really experiencing? Let's talk about that, the frustrations they might have.
Sure. No, so I think seniors, obviously, when we grow up in the United States and we hear about retirement and we see what the pictures of that looks like is, seniors able to relax after many years of working, being able to enjoy the fruits of their labor, being able to spend time with family, travel, be able to enjoy the golden years of their life. And a lot of times when I'm talking to clients, what they want to do is they want to be able to go visit their grandchildren. And what's happening a lot of times nowadays is grandchildren are having to move out of San Diego, out of California, because they can't afford to live here. So now the grandparents are having to travel maybe longer distances to see them. They want to be able to take their grandkids and do different things, maybe go on vacations together and spend time together. A lot of times it's just the fact they want to be able to know that they've got financial security, that they don't have to wake up in the middle of the night being worried about how they're going to cover their monthly expenses or, how much something is going to cost. If they want to be able to go out to dinner, if they want to be able to go to a movie, being able to do some of that stuff and not feel like they are on a short lace as far as what they can afford and what impact that's going to have on them going forward at the end of the month.
Now, Shanne, it's interesting you talk about that, almost like there's a way to tap the equity in your home and have that kind of available as an emergency fund, as a available money fund, as an accessory fund. Talk about how that can be done.
So there's a wonderful program called the HECM, Home Equity Conversion Mortgage. It's an FHA HUD-backed mortgage. It's been around for over 40 years and has gone through a lot of changes to make it even a better program that will allow the seniors, the retirees, especially in San Diego, that have been blessed with appreciation in their homes, to be able to tap into that and be able to have some additional money on a monthly basis to get rid of their mortgage payment. If they're paying $1,500, $2,000, $3,000 a month towards their mortgage payment, free up that money so they've got additional cash flow that they can use to travel, to spend time with their grandkids, whatever it is they want to do, and not have to worry about where that money is going to come from. So tapping into that equity is a great source. We've been blessed with it. Appreciation has run crazy over the last number of years. And now most people out there, the average home price is over $1 million. And so they have tremendous equity in their home, and it's really dead to them until they either tap into it with a HECM or if they decide to sell the property.
That's interesting. And we know that with, we're sitting on this equity, and you're right. I mean, in Southern California, especially in the San Diego area, we've been really blessed with like this tremendous increase in value of property. Along with that, the cost of living goes up, everything gets more expensive, your equity is growing. And yet if you're on a fixed income, your income doesn't grow. Your Social Security doesn't grow as fast as the inflation. And yet you can tap into this great equity that you really didn't do anything for, except you maintain the house and live there. But now you can get into it without having any negative tax consequences, without having to sell and move. And I just think that's a great program. So Ken, the easiest way, my understanding, to get a hold of you, the number is 858-683-1716, 858-683-1716. And I'll tell you, when I say that I recommend Shane, I do that very sincerely because he's been able to help out some clients of mine in meeting with them to determine if this is an option for them and what are other things, what other things do you need to know to qualify for the loan and all that. And that's what we're going to be continue to talk about. But his number is 858-683-1716. Shane, will you give away more of those free HECM guides if I give out that number?
I sure will.
All right. So Shane has this guide, and it's a reverse mortgage, a home equity conversion mortgage guide, and it's free. So it'll help you understand how it works. The number, so what you do is you text the word reverse to 858-683-1716. So reverse, what you do is you say, I want to send a text. Here's the number, 858-683-1716. And what the message is, reverse, click send, and then you'll be able to get that free HECM guide sent to you right away. And I've heard nothing but good about it. People like it. It's a great guide. It's short. It's easy to understand. It'll kind of give you some ideas on how to potentially tap into the equity of your home. And man, it's crazy, man. You go to McDonald's and Happy Meals, $6.50. It's more expensive to do everything. I was really always shocked when I go to the store. I'm still shocked. I get sticker shock. I just go, oh my gosh, I can't believe what things cost, how much they've gone up. You're sitting on that equity. It's growing. It continues to grow. Shane's going to explain some really cool things coming up next on how this HECM program works, so that you don't have to really stress out about, oh my gosh, am I going to run out of money? Is my Social Security going to give? Do I have enough money? There's some incredible ways. So keep listening to this program. I'll tell you some great ways to be able to tap into that and have that financial freedom that you want. Coming up next here on The Word on Wealth with Shane Sleder.
You've got questions. We've got answers.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christians just don't understand that the money they save for retirement usually helps fund the abortion industry and other liberal anti-family causes.
Are you there, Gary?
You know that with just a few minutes
Yes.
of your time, we can screen and clean
All right, just checking in.
at no cost to you. It's absolutely complimentary. Just go to the website right now, download a free copy of my book, Faith-Based Investing. It's free as well. You deserve to know the truth as the investor. Then the choice is yours. You can keep doing what you're doing, or you can line up your investments and life savings with your beliefs. We are fiduciary investment advisors. You can feel good about investing with confidence. So learn more now. Go to BibleSafeInvesting.com or call me at 931-RETIRED. Your free book is waiting for you. Go to BibleSafeInvesting.com and be sure that you listen to Faith-Based Investing this weekend right here on Family Talk.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. So have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. gqlaw.com, 855-500-TRUST, gqlaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Gary Quackenbush of The Word on Wealth. You hear Ken every week here on The Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group. From single-family attached homes to luxury high-value waterfront properties to apartment buildings, Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com. Or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
Water and mold restoration, and they'll get to work.
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855-500-TRUST.
Shane Sleder is our mortgage advisor here on The Word on Wealth and has been able to help people figure out how to get over the retirement problem of being so frustrated that you feel like you're financially strapped. You're sitting on a bunch of equity. So I have a question specifically for you, Shane. So I met with a young lady, not young, a silver-haired lady, a couple of weeks ago, and I was talking to her about her estate plan, and we got into the issue of, how much you have in retirement, and it was okay. And how are your investments doing? They're not doing very well. The value of house was literally $1 million. Loan on the house was $0, and she was really struggling. I talked about she had grandkids. They lived in different states. What about traveling? I don't really do that much. I just don't have that much money. And I said, you are sitting on $1 million of equity. Have you ever thought about getting into that? And she said, well, I don't know what you're talking about. I don't know how that works. So I thought maybe I'll have her listen today and have you talk about that. If somebody in that situation, similar, feels really stuck sitting on that, what would you suggest?
Well, the HECM reverse mortgage, home equity conversion mortgage, allows us to take people who are 62 years or older, own their home, whether it's free and clear or if there's a mortgage on there, and be able to, it's free and clear, tap into that so that we can provide an additional monthly cash flow to them, or they just have a line of credit available to them if they ever need something if they need to go on a trip, if they need to do some work on their house, be able to use that money when they need it. And the great thing about the reverse mortgages is that there are no monthly payments required. So I have a lot of clients. I'll tell you a situation similar to this where I had a client who was retired. She was single. She had decent money in her retirement accounts. She had a house that was free and clear, but through talking with her and her trusted advisors, we determined that it made sense to put a reverse mortgage on the home, not because she needed the money right now, but because we wanted to be able to plan for any unforeseen needs in the future, if any changes occurred. And so by simply going in and putting a line of credit on the property, not a HELOC, not a traditional second mortgage, but a reverse line of credit, that allowed her to have access to an initial line of credit of about $250,000, $300,000. And over time, that line of credit will grow to where she can now, 10 years down the road, maybe she might have access to $400,000. And so if she really needs it, if there's an emergency situation, she can now tap into it, have no payments, not have to be struggling on a monthly basis. But it's a great way, a great tool to set this up ahead of time if you ever need it.
So in that situation, then if somebody has that line of credit available, it's there as a line of credit. It's available cash. It's not like a loan against the house that now starts accruing interest and she can put it in her bank account and wait to spend it out of her bank account. It's literally a line of credit there poised for her to access. Is that right?
Correct. Anytime she needs money, she can send in a request. That money will then be sent to her checking account to utilize at that point in time. And because it is home equity, it's not taxed either.
That's so cool. I just love that because that's a great way to explain it too. I appreciate that. And now I've had people, I talk about reverse mortgage and they immediately say, "Oh my gosh, no, I'd never do that. I would never do that." And I start to ask them, "Well, why do you say that? I mean, you really are struggling. Your kids are doing fine. You're not having to support them. They're kind of on the borderline having to support you. If there were a way to turn that around so you could be financially independent, not have to depend on your kids, if you could pull some of the, take advantage of some assets that you have now, is that something you'd be willing to do?" And then, really it comes up, well, explain that to me. And that's what we're doing here, which is really, really terrific. One of the things that people do get worried about is they say, well, but if this is a different situation. I was talking to some younger people about, they were trying to figure out how they were going to help mom, because your mom was the same thing. She had a house with, $950,000 or so of equity, and the kids are trying to pool their funds to figure out how they're going to be able to support mom. And I said, well, there's a different way. Instead of you guys pulling money out of retirement accounts and out of your savings, there's a way that mom could access the equity in her home. And they've said, well, but we don't want our mother to lose her home. So can you address that?
Yes. So reverse mortgages are just like any other lien on the property. It's a lien on the property. You don't lose control of the home. You don't lose title to the house. There are precautions and safety measures put into place so that a senior can continue to live in the house as long as they want. I want to share a quick story, Gary, that's really near and dear to my heart, because I get people asking me the same thing. Well, would you do a reverse mortgage? Would you have your parents do a reverse mortgage, someone in your family? And actually about 3 or 4 years ago, my wife's grandparents were in a situation where her grandfather was in the hospital. He didn't know if he was going to make it or not. He had been, battling some health issues. And so when we started to look into their monetary situation, turned out that there was a second mortgage on the property that the grandmother wasn't aware of, and that there was some credit card debt that had accumulated as they were trying to keep up with everything in the medical bills and all of that. And the fear was when the grandfather passed away, some of his pension, some of his other income was going to be going away. And how was the grandmother going to be able to continue to reside in the house and take care of all these expenses? And so we talked about a reverse mortgage with them. We showed them what could be done. I worked through the process, got them approved for a reverse mortgage. My wife's grandfather came out of the hospital and recovered for a while, but we were able to pay off all of the credit card debt. So they didn't have that stress and that burden of all of the monthly payments coming in. We were able to pay off the 2 mortgages, so there were no more mortgage payments. And then what they were able to do is they also were able to replace all of the fascia around their house that had termite damage and some other work that needed to be done. They were able to replace their garage door, all of these things that they weren't able to do because they didn't have the funds. And about 6 to 8 months later, my wife's grandfather did end up passing away, but her grandmother was now able to have all of that stress taken off her shoulders because she had no housing payments. She had no credit card debt. She had a house now that was fixed up so that she didn't have to worry about what was going to be happening with it. And it just allowed her to be able to focus on what she needed to do with the loss of her husband versus being able, having to focus on what she's going to do to have income coming in. And so it definitely changed her whole situation. And so I have recommended it to people in my own family because it is such a great tool to utilize for seniors that need that additional cash flow, or maybe they even have a decent amount of retirement income, but they want to be able to enjoy their retirement more.
I love that. And I appreciate you sharing that personal example of how, that home equity line of credit, that the money on reverse helped out. And you touched on a couple of things in that story too, that I, it really strikes close to it. It kind of resonates with me because I'm dealing with clients in similar situations where I'm going through and looking at and say, how much is your house worth? Oh, it's about, 950,000. And then they kind of get embarrassed, like, oh my gosh, I only bought it for like, 100,000. And I said, well, do you have any loan on it? Which immediately you would think, Gary, why would you ask if there's a loan on the house? And 75% of the time they go, yeah, I had to take out, I had to do some repairs so I got a mortgage, and the mortgage was like 280,000. I said, well, you're 75 years old. You have a $280,000 mortgage. How are you making that payment? Well, with my Social Security, and then that gives me enough for food and stuff. And I felt really bad. And I immediately think you got to call Shane, because you shouldn't have a conventional mortgage when you're in your late 70s and you don't have any income to pay it. I said, you can get rid of that payment. She goes, oh, I'm okay. I said, you can't go anywhere. You can't even visit or do anything you want. So, that's another one of those circumstances where I would just ask you, if somebody's sitting there and has a mortgage on their house, how would you explain that to them? Like, you can get rid of that payment. What would be a way to do that?
Well, what I always explain is that, when you're looking at a reverse mortgage and the options that come along with it, and you do, if you're able to get rid of that first mortgage, you've now got instantaneous cash flow from what you are paying towards that mortgage. Now, the senior was using that money to pay down the mortgage over time. Now what's happening instead is they've got access to that money so that they don't have to go without, they don't have to run up credit card debts. And now their loan is growing over time because now they're not paying any payments on it. The interest does accrue on the reverse mortgage so that the equity is being used to help them, on the monthly basis. But it's really just moving the money around, because now you're using the equity instead of having to use credit cards, instead of having to tap into your retirement accounts, whatever it is. Maybe you, instead of having to go and talk to your kids and borrow money from them,
2 minutes.
Want to have, they have pride in the fact that, they don't want to have to go and ask and request money from their kids. They want to be independent. They want to be able to take care of themselves. And a reverse mortgage allows them to continue to have that independence monetarily, and also maybe even continue to allow them to live in a house that otherwise they would have to go into an assisted care facility or retirement home, whatever that may be. They now can still be on their own.
To get this information from Shane, you can call him directly. Here's the number: 858-683-1716. 858-683-1716. Shane is offered for all of you listeners, anybody that's listening to the show, just mention the show. Call 858-683-1716, mention the show, and Shane will give you a free consultation to go through and see if these, if this is in, something that you could use that can help you financially. Shane also is willing to meet with family. So if you want family to join, or a financial advisor, and this is crazy, Shane does this stuff that nobody else does. He will help. If you want, he'll have the financial advisor there and help talk them through that to see what kind of program is available. That way you've got your team, and you can talk about, tapping the equity in your home so that you can have the freedom that you need and that you want in retirement. 858-683-1716. Shane's got a couple numbers. His NMLS number is 239958, and his DRE number is 01346265. Shane, thank you so much for helping clients and for doing a great job for our listeners and helping them with reverse mortgages, man. Hope you have a great day.
You too. Thank you, Gary.
All right, you guys, coming up next, a little recap. I'll give Shane's numbers and information again. But it's the way this stuff fits into your life. It's really something you need to talk to people about. And we'll be right back on the Word on Wealth.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
Have today's economic conditions and high inflation made it difficult for you in retirement? Hi, I'm Shane Sleder, the mortgage advisor on the Word on Wealth. You hear me with Gary Quackenbush, answering your questions every Tuesday at 2 p.m. For over 20 years in San Diego, I've specialized in home financing solutions for seniors as they get older and their families. If you qualify, a reverse mortgage allows you to convert part of your home equity into either a lump sum, line of credit, or much needed monthly income. You're insured and protected against ever owing more than the value of your home. And you don't have to sell your home, give up title, or get new conventional mortgage financing with monthly payments. The program is designed to make it easier for seniors to qualify. I will walk you through every step of the process. To receive a free reverse mortgage guide by mail, text REVERSE to 858-683-1716, or give me a call on my direct number, 858-683-1716.
Licensed with the state of California. NMLS ID number 239958. DRE number 01174642.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. gqlaw.com.
All right. So that was Shane Sleder, our mortgage advisor here on the Word on Wealth. I just want to make sure you have his number. If you have questions on reverse mortgages, home equity conversion mortgages, and what they can do, the way we have set it up with Shane is that if you tell him you're a listener of the show, you get a free initial consultation, and then he will talk to you about whether a reverse mortgage would be something that would be helpful to you. If you're concerned about having, other people on your team, then you can have your financial advisor be part of it, whether it's going to be on a call or a Zoom or in person. And you can have, if you have a family member that's planning to be your successor trustee or that helps you out financially, I think those are definitely people that you just talk to Shane to have them in with on the interview. Now, I want one thing, and this ties right into estate planning, which we're going to be talking about right now, is don't wait too late to do things, okay? As we get older and things start to slow down, that's just totally normal. The way we process information is slower. The way, our vision is a little bit slower. Our hearing is a little bit slower. Just the way we process things. It's not that we're becoming, less smart. That's just the way it is. It's just part of the aging process. It's nothing wrong or abnormal about it. It's just part of the aging process. Well, there comes a point in everyone's life where you can't make decisions on your own. You can't make them independent. And so therefore they are not legally binding. Okay. Obviously, that at death, that's pretty clear, but sometime before that, 70% of us become incapacitated legally, and legally incapacitated means you're no longer legally capable of making financial decisions or decisions for yourself. So if you're thinking, you're kind of struggling, you got your money issues going on, and you're thinking, maybe I'll do this someday, I'll just think about it in a few years. What if you got to the point where you're now incapacitated and you don't have the ability to make those decisions, to pull equity out of your home, to be able to take care of you, to pay for assistance or home help or something like that? These are things that you wanted, like any estate planning, thing or option. You want to take advantage of these things and learn about them while you still can. And you're just fighting odds. It's not a bad thing, but we all get older. We all die, and 70% of us become incapacitated. The incapacity thing, becoming incapacitated, is so much more difficult financially and so much more difficult on your family, because somebody still needs to take care of you and manage your money and watch out for you. And if you're incapacitated, that becomes a much bigger challenge. If you planned ahead of time and made it so that you can take care of yourself and that you've got money available and potentially tapped into your equity in your home, those are all going to be positive things, so that the after death mess is just much less. And, to talk about trying to pull equity out of your house, if you can even do it, and it depends on the circumstances, most of the time you can, but if there's any liens on your house, like for a home loan or something, then that has to be taken care of, and that could be taken care of through the home equity conversion mortgage, the reverse mortgage process. So you got Shane's number, 858-683-1716. You could also text the word reverse to that number and get your free home equity conversion guide. That way you're going to know what you're doing. So you study this stuff out. Think about it. Get it right. Call me if you have any questions. If you want help from me and you don't have your favorite financial advisor or your favorite estate planning attorney, then I want to be that attorney for you. And I would be happy to have a free initial consultation to explain what your rights, your options are as far as estate planning, what you can do, how to get your money to go where it wants to go. I love interviewing people. I love talking to clients, and I do it every day. I do my interviews Monday through Thursday, and I deal with a lot of people. Sometimes, a dozen or two a week. And it's fun to talk to people about their situation. And we've got some really great people on our team here at GQ Law, and we can help get your estate planning together. And to get that started, we got about a 2-week turnaround. So we're coming up on, when you get closer to the holidays, things get a little panicky. We're like super busy right now because people are starting to go, oh, maybe I'm going to travel. I need to get my estate plan done. Get it done. If your kids don't have it, you can pay me and I'll do a package deal. It's like, I'll send them, I'll give you like a template and a coupon, and you can give that to them for Christmas. And you can say, hey, son, this is going to help you get your estate plan together, your guardian designation for your kids, my grandkids, and you don't have to pay for it because dad's got it covered. So you can do that. Done that before, which is a super fun thing to do. Give it away as a gift. You got to call me, talk about it. get a hold of me, get an appointment, get on my calendar, 855-500-TRUST. Interesting case. So I had a case where mom was talking to her kids and trying to make a decision on what to do. And she was debating between, she had 3 children, and 2 of them were doing very, very well. One of them was not doing very well at all. So her concern was if after she died, she gave all of her property to her 3 children in equal shares, that the son that was struggling so much would just waste his money. That was one concern. A bigger concern was that son that couldn't handle his money was involved in some illicit behavior. So he was doing drugs, and that was going to be a problem for her to believe that if she gave this large inheritance to her son, that would be something where he could, it may hasten his death because he might use the money for the wrong thing. So she was worried about his financial ability to manage his own affairs. And then, now he's got basically nothing. And what if he inherits all this money from mom? Is that worth it? So it was a big toil for her. We talked about it. She was really struggling with the decision. I don't want to disinherit my son because that seems horrible as a parent. That was her opinion. And I want to leave him something, but I can't decide. And if I put it in a special fund for him that's just available based on certain tests, who am I going to have as the person running that? Do we really want his sister being his money keeper for the rest of his life? And so it was several conversations, emails, talked to her and her kids, tried to resolve it. She passed away before she decided what to do. So the tragedy is all of her kids are going to share the estate, 3 people, but it has to go through probate because she didn't do anything. She was too late. So the probate is going to put her property in 1/3 to each of her kids, regardless of their social behaviors or their problems or anything. It's 1/3 because probate courts don't say, that beneficiary, he's using drugs, I'm not going to allow him to have any money. They can't do that because that's not their choice. The judge's decision is who's in charge of the estate plan, who's in charge of the money, and who does it go to? And that's it. And they can't say, well, okay, this brother's well-behaved, we'll give him a bunch of money. This brother's not well-behaved, we won't give him any money. The judge won't do that in probate. The judge is simply saying, here's what these people get. So I feel bad that her paralysis in analysis went on too long, but those are things to think about. Very similar case I had many years ago, that when mom was trying to decide, do I take out my daughter because of her behavior? I don't like what she's doing. I don't like that she's got children with, from different fathers, and she's just a terrible money manager. And I don't want her to have enough money to cause problems. I want to take care of my son and my other daughter. But while she was messing around with that decision, while she was trying to think and couldn't just bring herself to make the decision, it got to be the point where she was a little bit fuzzy on what she wanted. And the result was when she made a change and disinherited her daughter, the daughter challenged it after she died. And the challenge was mom made that decision when she lacked capacity, and it's an invalid change to her estate plan. Well, that's actually what happened, because she was able to get through the discovery and litigation process records from the doctor showing that mom had dementia and that she was struggling to make good financial decisions. And unfortunately that kind of killed the whole thing. So it made it so that mom's change, she waited till she was incapacitated, unfortunately, and that change was determined invalid. Super expensive process, a lot of money wasted. the amendment was invalid. You guys, let's just get it done on time. Get your estate plan while you can. It's not that you're all going to expire really quickly, but it's a 2-week process. It doesn't take that long. It is not as expensive as you think. It's going to be fun to talk about it. To get it done, you'll have a big relief. Every client I've ever had that's come in and signed their estate plan, they just go, oh, got that done. Big relief. Check off that box. Get your estate plan done. 855-500 trust. Coming back, we're going to talk about a couple things about trusts on what you need to do after someone dies, right here on the Word on Wealth.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com.
Gary, how do you and your team help our listeners avoid probate?
Well, first of all, probate is a process that involves attorneys, judges, and sometimes contesting parties. And so we try to avoid probate at pretty much all costs. The way we do that is setting up living trusts, setting up properly documented wills, putting the property like houses, cars, bank accounts in that trust so that it avoids probate. Probate is only necessary if the estate plan isn't set up quite right. So we help them get it set up right. And mainly that's done through a properly created living trust.
Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free initial consultation. That's gqlaw.com, 855-500-TRUST.
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855-500-TRUST.
I'm glad you're along today. We have got a couple more things to discuss till we get, the show will be done because we're going to go right to the top of the hour, but there are a few things that we really need to cover. If you are a successor trustee, so what happens is, for example, parents pass away and they've named you to be their successor trustee. And initially you may be really excited thinking, oh, that's really nice because mom and dad, they must have thought I was the favored child. And so I'm assigned as the successor trustee. It's a big job. It's not easy. And hopefully you won't think after, 6 months of doing it, you're not going to think, oh my gosh, I must have not been their favorite child because they put me to work and this is hard stuff. But as a trustee, you do have some legal requirements. And what I want you to understand on this is that it's not just a matter of cutting the pie up and handing out slices to people. There's some legal requirements. See, when all of us, as we're alive, I mean, we have legal obligations. We have our utilities, we have mortgage, we have insurance, we have reporting requirements, Social Security, income, deposits, bank accounts, all the things in our life that are run by us that over the years kind of amass and get complicated. And when you pass away, all that stuff is going to be left for someone to to basically clean up and close up and turn off and all that kind of stuff. So you, as a successor trustee, that's going to be your job. You got to figure out, where are the utility bills, cell phone, regular phone, insurances, life insurance. You got to figure out not only where their assets are, like where's their bank account and where's their savings and investment and all that. Hopefully that information is kind of not too hard to figure out. But you also got to figure out what are the expenses they're paying. So you're going back through their bank statements, you're going through their online statements to try to figure out what's being paid. Do they have an iTunes subscription, and then an Apple storage subscription, and then a Google storage? And then you got to think, oh my gosh, if they have an app or the iTunes Apple storage for all the photos, if you go and turn that off, you don't have access to it anymore. So what are you going to do? Are you going to then go and download 3 gigabytes of pictures? My dad left a computer that had 160 or 170,000 pictures on it, on his hard drive. And I'm glad they were on his hard drive. He didn't believe in paying for, offline, online storage. But a lot of people do. So you got to be careful if you cut them off, if you cut off the online storage by not making the payment, or by turning off the payment, or shutting off the credit card, or closing the bank account. That could be a disaster, because now you have all these online payments, online pictures of your parents that are no longer available to you because you didn't download them. So those are things, there's just a lot to do as a successor trustee. All right. Now, some of the things that are legally required that you may or may not know about is, the first thing is you have to provide a copy of the terms of the trust to all of the beneficiaries. So anybody that's named in the trust, even if it's named and they say, I disinherit Johnny, okay, Johnny plus everybody else named in the trust gets a copy of the terms of the trust and a probate code notification that says, you have 120 days to object to this. If you don't object within 120 days, then you're out of luck. So there's this notice required by the probate code, and you send them a copy of the terms of the trust. If that beneficiary requests the trust, because it says in that notice that they're allowed to, if they request the trust within the 120 days, then they have an additional 60 days from when they receive the trust to review it. That means they might have 180 days. That's 6 months. And within that 6 month period of time, they can object. They can, and even though there's a no contest clause that says if you contest this trust in any way, shape, or form, then you're going to be disinherited. You still have, if you're contesting, you're not contesting the trust, you're challenging the validity of certain things by saying, well, if the trusts were valid, okay, but mom had dementia, which is what I was talking about earlier in the show, is what about the situation where mom was diagnosed with dementia, and then she made some huge change to the trust and decided to disinherit one of her kids? The kid that's disinherited is going to challenge, and so you got to give them the notice that they have 120 days to object, that they get the terms of the, they can have the terms of the trust, and they can have a copy of the trust. What I do is I just shortcut all that. I send out the notice saying they're allowed to have the terms of the actual copy of the trust, and I give them a copy of the trust. So my notice says, you're allowed to request a copy of the terms of the trust or receive a copy of the trust. Here's your copy of the trust. So you have 120 days to object to the terms. And if they don't object, then it's done, which is nice because you want to be able to move on. But that's a little bit of a waiting period, right? You got, 4 months to wait. Also, you got to notify creditors to make sure that there's no creditors hanging out there. And when I suggest this to people, and most of my successor trustee clients say, my dad had no debts. He didn't believe in debt. He paid off his mortgage. He paid off all his credit cards. He has no debt. Okay, fair enough. Those are known creditors, right? Is there a credit card debt? Is there a house loan? Is there a car loan? Whatever. Those are creditors that usually people know about. What about unknown creditors? Well, how do I know about unknown creditors? That's the point. What we do is we publish a notification in a legal notification paper that says, if anybody has a claim against this estate, against this person, you have 120 days to make a claim or forever are banned and barred. The reason that we do that is because what if somebody noticed that the house was not being lived in anymore and it's vacant. So the lawn's a little longer because usually it gets mowed every week or two, and now it's been about a month. It's not surprising that some people can figure out that that home is vacant. So house is worth some money. What if I slipped and fell on the lawn or tripped or broke a leg or broke a window or was trying to climb over a fence and cut something and whatever? Those are things that are potential claims against the homeowner. Yes, I know the homeowner is deceased, but the homeowner's trust or the homeowner's estate is still the owner of that property. How do you know about that claim? You're not going to know until that person comes in with a lawsuit or the claim saying, hey, I was damaged on the property, blah, 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 and I want money. I want to talk about it. I want to settle. Those things can come up, and there's a 2-year statute of limitations on that. Instead, what I like to do is if somebody comes in with a claim, it says, hey, you owe me money because I got injured on the property. I like to hand them the legal notice that says, well, actually, we publish right here in this newspaper of general circulation, and we informed anybody that if you were a creditor or had a claim, you had to submit that claim within 120 days. And it's been more than that. Sorry, no claim. So I want to get things like that cut off. And I know people think, well, Gary, that seems like overkill because my dad wasn't being sued. You may be right, but there's 2 years after he dies. There's potentially 2 years that somebody can make a claim against the estate. So I want to cut those off. You're required by law to notify the Department of Health Services and see if they have a claim against the estate for reimbursement under Obamacare or under the Medi-Cal provisions or anything like that. Some of those come up and you're surprised, like, wait a minute, my mom and dad had money. Why do they have a Medi-Cal claim? Why did something come up under Obamacare? We want to cut those off. And you're going to pay for all the bills for the health, education, maintenance of minor beneficiaries. These are things to be done after someone passes away. When we distribute assets and change titles, you got to get that done right. It's got to be done. Sometimes you use an escrow, sometimes you don't, but you got to change title, get it right so that later your sister doesn't come back and say, hey, dude, I thought you transferred this thing to me and I just found out because I'm trying to refinance it that it wasn't done right. What are you thinking? What did you do wrong? And then you're they're trying to fix the mess. So you want to get those things correct. You want to get the title transfers correct. You want to make sure everybody's going to be happy. And then really what you want is to be done. You want to know someday that you're going to be granted a relief from this successor trustee job, because either that, it's going to seem like it just goes on forever. And you're kind of like, I think I'm done. I think I'm done. I did everything that I think I knew that I needed to do. When does somebody say, thank you, Mr. Successor Trustee, Ms. Successor Trustee, thank you for your service. You are now relieved from duty. When does that happen? It doesn't. So what you have to do is make sure that all the beneficiaries are happy. And you do an agreement called a beneficiary agreement, where the beneficiaries see all the accounting, all the stuff you did, how much money was spent, how much money came in, how much money they're getting, and they all sign off and say, okay, it looks like my successor trustee brother or uncle or whoever did a good job. I'm fine with that. I'm not going to sue. Go ahead and give me my money, and we're done. So once you do that distribution letter, the agreement, beneficiaries sometimes want to fight about it. That's okay. We can work with that. But then you officially close the trust. Close the trust, shut off the tax ID number that you got. You're going to hold some money out for the next couple of years in case there's an issue with the IRS or some statute of limitations problem that slipped through. But you're going to want to make sure that everything's done, because then you are officially can take off that trustee hat and no longer worry about being the successor trustee. And I know those of you that are successor trustees or have been, you know exactly what I'm talking about. You're thinking, I think I'm done. I think I got everything distributed. There's no money left in the account. And everybody, I think, is happy. So I think I can close that bank account. And you don't know, because you don't know if everybody's happy. My experience has been, as long as nobody's talking, there's no problems. But as soon as you decide to do something like, hey, I've decided today that we're going to sell dad's motorcycle and divide up the proceeds, all of a sudden, everybody's concerned about you doing that. And how much are you going to get? And I want to buy it from the estate. You know, that happens with houses all the time. It happens with personal property. As long as you don't touch anything, nobody says anything. But as soon as you say, you guys, we've been storing this stuff long enough, I'm going to donate it all to charity so that, you know, somebody else can have it. And all of a sudden, all the beneficiaries are going to say, whoa, 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 wait a minute. We want some of that. We want to come and look through it. So you got to get done with your job. You don't want this to last forever. Every time you have a family reunion, there's a question of whether you did the trust or not, what was done, whatever happened to this, whatever happened to that. You want everybody to sign off. This has been the Word on Wealth. It's been a pleasure to be with you today. We're talking about reverse mortgages, talking about estate planning and trust estate distribution. We'll be back tomorrow with Ken Pecos of the Pecos Group, who talks about real estate stuff from a perspective of a financial genius. That's Ken Pecos coming up. And we really appreciate Shane Sleder being on the show with us today. Make sure you call him for all of your mortgage needs, reverse or regular, 858-683-1716, or call me, 855-500-TRUST. See you tomorrow.
Tell a friend about the Word on Wealth, featured since 1995, with financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax
Thank you, Gary. See you tomorrow.
president of the
All
California
right.
Society of
Thank
Tax
you.
Consultants. Reach out to us. The Word on Wealth team of
Go ahead and let it keep
financial
running
experts
until I
is here
get
to
through the
answer your
disclosures,
questions and help
disclaimers.
preserve
They'll be
your
on
family's financial future.
YouTube.
The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial